Should you ask for $7,000 off the purchase price or $7,000 credit? We're going to go through that and what options may be available to you to save in the monthly payment in this crazy, crazy time and market. If you are in Kentucky, Tennessee, Florida, or Georgia, I can help you and we'll have a conversation. Even if you're not located in that state, go ahead and DM me. I'll walk you through it and see what options you may have available. That way you can get to a loan officer that is licensed in your state and help you navigate the home loan process. Okay, so $7,000. Where should I take it from? We're going to take an example of $300,000. Let's say you're looking at a $300,000 house, $307,000 house, whatever, somewhere right around $300,000. And let's say that you're like, you know what? I want to offer less to get a better deal. But monthly payments is actually your number one goal. Hey, you want to be able to afford it. You're tired of seeing 7% interest rates and gosh, I just want to afford this. It's a little stretching me a little far each month and I want to be able to afford it. So, hey, I'm going to go ahead and try to get $7,000 off. If you get a $7,000 off and they take it off the purchase price, that's going to equate to 40, 45 bucks or so, somewhere in that area, depending on exactly what the rate is. However, guess what? If you instead have them keep the purchase price the same, and you can get them to pay for your temporary rate buy down. It's called 2-1 buy down. You can get them to pay your buy down. So for the first year, you'll go down 2% in your interest rate. You may go from, say, a 7 to a 5%. And that equals $385 difference per month that you're going to be paying. So you're going to be paying $385 less by getting that $7,000 credit for the first year instead of $45. Now, the second year, you're still going to get almost a $200 less of a payment during that period. By the course of less than 2 years, you're going to likely refinance this home to get a lower permanent rate for 30 years. Now, you're going to have a permanent rate on the 2-1 buy down, but it's going to go from, say, a 7 to a 5 the first year. The next year, you're going to have a 6% rate. And then after the second year, it'll go back up to a 7%. You're going to owe your refinance. Here's the kicker. Yes, you can do it by yourself and go ahead and pay that down. However, if you get the seller to pay for it and you don't use all of it because you refinance, say, in the next year, you'll get that credit back. So if your payments is the number one goal, getting your payments down in this market, instead of asking for $7,000 on a $300,000 home for them to lower, get them to give you a credit. I can walk you through that and help you, even if you're not using me. Be glad to walk you through that. That way you can make the best negotiation for you and your family and get the lowest possible payment that you can afford. We'll see you soon.